Well, good morning. I'm Jagender Rana. The topic of the day is self-approval for Provident Fund withdrawals. Self-approval for Provident Fund withdrawals. The Employers Provident Fund Organization, that is called EPFO, the Employees Provident Fund Organization, may introduce a self-approval mechanism for subscribers to withdraw Provident Fund monies from their accumulated corpus under an automated process by early next fiscal year. If this results in any liquidity crunch for the EPFO, it may avail cash credit from commercial banks to meet temporary requirements. So by financial year 2024 and the total corpus of EPF was rupees 24.75 lakh crore, of which about 63% was invested into financial instruments such as government securities, corporate bonds, exchange traded funds, etc. So the EPFO is going to hold consultations with the Reserve Bank of India and major commercial banks to prepare a roadmap on how this mechanism can be established. This Social Security Agency is currently working on upgrading its technology infrastructure, which may be ready by March to facilitate the easier withdrawal process. Going forward, the EPF subscribers will only be intimating the fund regarding their withdrawal amount as against going through a tiresome withdrawal process, which is the norm at present. We want to ease the process of withdrawals of claims via PF account as much as possible. The idea of allowing subscribers to withdraw money through ATMs is also part of the same process. This sectoral limits and the reasons of withdrawal will not change, only the process will. So for instance, as per the extant norms, subscribers may withdraw up to 50% from the PF fund for the purpose of education and marriage, and for the repayment of home loans, the limit is 90%. So the sectoral limit will not change, but the subscribers will find it easy. The withdrawal will be on their fingertips. The current checks and balances done through EPF officers that are needed are likely to be reduced. Filing of norms will not be required as the entire process is going to be automated. The government is also exploring whether a digital wallet should be introduced linked to EPFO, which may keep the processed claim amount and be used for withdrawal. There is no finality about this. The views of RBI are necessary in this regard. So the FE earlier that processing of claims by EPFO has seen a sharp jump of about 30% year on year in August-September, thanks to the latest software upgrade by the world's largest retirement fund body digital platform. The government is likely to make the new EPFO information technology system, that is 2.01, operational in the next 2 months, which will ease the processes and the turnaround time for various members and employers' transactions. So the new system will result in centralized claims settlement, including end-to-end auto processing of claims, centralized monthly pension disbursement, universal account number, that is UN based EPF accounting, restructured electronic challan cum receipt with due statement and remittance challan, and doing away with the requirement of the transfer of members, that is ID or MIDs, on change of jobs. In FY 2025, EPFO has introduced simplified IT processes, auto mode processing of all types of EPF advance claims up to Rs 1 lakh, leading to around 40% of advance claims getting processed in auto mode. So members of the retirement fund body EPFO may soon be able to withdraw their provident fund money direct from ATMs after the settlement. Currently, subscribers of the Employees Provident Fund organization have to wait for 7 to 10 days for the settlement of their claims online. After the settlement, the money is transferred to the beneficiary's bank accounts. Under the plan, EPFO subscribers will receive dedicated cards that can be used at ATMs to withdraw savings. The EPFO is mulling providing services at par with the banking system to its more than 7 crore subscribers. Union Labour Secretary told that the focus right now in EPFO is to improve the IT infrastructure. EPFO means Employees Provident Fund Organization. So while improvements are being seen in the last few months, in January 2025, we will see more improvements coming in as a result of hardware upgradation. Efforts are being made to bring systematic reforms that make processes easier and more efficient. As part of this modernization drive, we also aim to compare EPFO system with the banking system in India that are in place and are working well for ease of living. Bringing more transparency and ease of claim is also part of the plan. Under the new system, claimants, beneficiary or insured individuals will be able to access their claim amount through ATMs. A maximum of Rs 7 lakh is provided under the Employee Deposit Linked Insurance Scheme run by the EPFO to the heirs of deceased subscribers. In the new system, the heir of the deceased subscriber may also be able to use ATMs to withdraw the money after claim settlement. The new system is expected to be rolled out after completion of a hardware upgrade by the EPFO. The body is also likely to issue dedicated cards for use by EPFO subscribers to withdraw claim amounts through ATMs. Presently, the EPFO has about 7 crore contributing members covered under EPF, pension and group insurance schemes of the retirement fund body. So, the subscribers, this is the system of ATMs, and the subscribers of retirement fund body, EPFO and employee state insurance corporations may soon be able to use the claim settlement amounts through e-wallets, EPF withdrawal from ATMs. So this is an area of great interest for the insured persons, a contributor. In case of auto settlement, the money goes to the bank account and they in any case are able to withdraw it from the bank account from any ATM presently. Now we are talking about how the claim can go directly to probably a wallet, or we will have to work out some mechanism. So there we have started talks with bankers, and also we are going to have a plan in place on how we can do this practically. How we can do this practically? So say Employees Provident Fund, also referred to as the PF, is a mandatory saving cum retirement scheme for employees of an eligible organization. The employee can fall back on the corpus of this fund post-retirement As per the EPF rules, the employee must contribute 12% of their basic pay every month to this fund. The employer contributes a matching amount to the employee's PF account. So the amount deposited in EPF accounts earns interest on an annual basis. Employees can withdraw the entire sum accumulated in their EPF once they retire. So EPF is a retirement saving scheme where both employees and employers contribute a percentage of the salary of the employees. The accumulated fund is tax-free at the time of withdrawal, provided certain conditions are met. It is primarily designed to provide financial security to employees after retirement. So one may choose to withdraw EPF entirely or partially. EPF can be withdrawn entirely only under the following two circumstances. One is retirement. Upon retirement, you can withdraw the full accumulated corpus. Secondly, unemployment. If you are unemployed for over 1 month, you can withdraw up to 75% of the balance. After 2 months of unemployment, you can withdraw the remaining 25%. Individuals cannot make a complete withdrawal of EPF balance while switching employers if they don't remain unemployed for 2 months or more, that is the interim period between changing jobs. Partial withdrawal of EPF balance can be made easily under certain circumstances. The limit of withdrawal is also different for different circumstances. They are explained like this. Limit for withdrawal: 6 times the monthly basic salary of the total. For medical purposes, employee share plus interest, whichever is lower. A marriage up to 50% of employee share of contribution to EPF, and the education up to 50% of employees share of contribution. Number of years service required is 7 years. Education up to 50% of employees share of contribution after 7 years. For land up to 25 times of monthly basic salary plus DNS allowance for house up to 36 times, and purchase land for purchase or construction of a house, seniority requires it 5 years, and the home loan repayment, total corpus consisting of employer and employee contribution with interest after 10 years, total outstanding principal and interest on housing loan. So this is the kind of the limits prescribed. Now the question is, broadly the withdrawal of EPF can be made either by submitting physical application or online application. So when a physical application is submitted, composite claim form, that is Aadhaar, use the composite claim form Aadhaar. If you have seeded your Aadhaar and bank details on the UN portal, and if your UN is activated, fill and submit the form to the respective jurisdictional EPFO office without the attestation of the employer. Composite claim form, that is non-Aadhaar, you can use the composite claim form non-Aadhaar if the Aadhaar and bank details are not seeded on the UN portal. Fill and submit the claim form with the employer's attestation to the respective jurisdiction EPFO office. One may also note that in case of partial withdrawal of PPF amount by an employee for various circumstances as discussed in the above, the requirement to furnish various certificates has been alleviated, and the option of self-certification has been introduced for the EPF subscribers. As far as the online application is concerned, the EPFO has come up with an online withdrawal facility which has made the entire process more comfortable and less time consuming. Prerequisites are only to apply for the withdrawal of EPF online through the EPF portal. Make sure that the following conditions are met. 1. The universal account number is activated and the mobile number used for activating the UN is in working condition. Secondly, the UN is linked with the KYC, that is Aadhaar, PAN, bank details, and the IFS code. If the above conditions are met, there is no need for the previous employers to attest to a withdrawal application. The government is planning to enable subscribers to withdraw the amount from their EPFO account by using ATM. This is expected to be operational by mid 2025. It's a part of EPF 3.0 scheme that is aimed at enhancing the features of EPFO and make it user friendly. Thank you very much.